Some basics for gross income. Now, as mentioned earlier in our introduction, this is going to include all income from whatever source derived, literally everything. We'll even see later on about how income from illegal sources is included as well. Gotta love that. Gotta love how they got Al Capone as well on that. This broad definition encompasses, again, everything: wages, salaries, unemployment. There are things that are excluded from gross income for various reasons. We'll talk about those. Non-cash items, such as the receipt of property or services, is also included in gross income. So you're not receiving a salary or a wage. Maybe your employer pays you in a car or something. We'll talk about the taxability of that. We're going to talk about how the fair market value of the property or service received is going to be the taxable amount. Now, for income to be taxed, it must be both realized, meaning the taxpayer has received the income or has the legal right to it. Now, generally, realized versus recognized is going to be a very important distinction for our course here. Realized means this transaction or gain or loss really happened, and that's pretty straightforward. However, recognized, this is where our arbitrary IRS rules come into play. Recognized means if it's actually recorded for the tax return. Great example, municipal bond interest income. It's going to come up throughout the exam a lot. This is income from bonds that you've invested in local municipalities, small cities, towns, all that. Why is that tax free? Well, the federal government wants to incentivize you to invest in small towns instead of corporations. So income from those bonds specifically is tax exempt. Let's say you get $1,000 in income from one of those bonds. You really did get $1,000. So you'd realized $1,000 in income. However, you recognize zero of it because, again, arbitrary IRS rules say you don't have to recognize it. Recognized means it's included on the taxpayer's return. Make sure you have this down. If you make sure it really happened in the real world, recognized, recorded on the tax return. Make flashcards. Make sure you get this down right now because this is going to come up much more heavily as we go through the course. All right, getting it through. We're just going to have a lot of examples, lots of lists. You're just going to get so familiar with these. Memorize ones that you might not be as familiar with. We'll have lots of examples, numerical-based examples on these. Gotta love it. But these are generally items that are included in gross income. So money, pretty straightforward. Wages, salaries, tips, commissions, interest, dividends, all that good stuff. If you earn $60,000 a year, you're going to include that in gross income. And as you kind of get through, these might be more obscure, and that's fine. But these are all equally eligible to come up on the exam. Property, we're going to use the fair market value for that. Income can also be derived from the receipt of property, such as stocks or real estate. So the fair market value is going to be used. So, for example, if you receive a car worth $10,000 as a gift from your employer, that's basically the IRS saying, hey, you might as well have gotten $10,000 bonus from the employer. So you're going to be taxed on that $10,000 car. A bargain purchase, if a person buys property for less than its fair market value, the difference between the purchase price and the fair market value will be considered income to the buyer. Now, for example, if a person buys a house worth $200,000 for only $150,000, that $50,000 difference is included in their gross income. Now, one thing I will say, some of these things are a lot more difficult to enforce. I'm going to skip down to this one right here. Discovered treasures, such as cash hidden in a furniture purchased at a flea market. This is one that comes up throughout the exam every once in a while. Can the IRS really enforce this? No. Should you be a good little taxpayer and report it? Sure. But you buying a piece of furniture, a dresser at the flea market, and there's $100 in there, is the IRS ever going to find out about that? Probably not. Just like with gift taxes, if I give my son $500, will the IRS probably ever find out about that? Probably not. But we're here to use the tax laws and rules as they are stated, kind of like a textbook. So just something to note there. Again, like if you buy a car, you just message someone on Craigslist, Facebook Marketplace, cars.com, I don't know, wherever you buy a car, and you buy it for less than it's worth. Is the IRS ever going to find out about that? No. So I just want to acknowledge that, but make sure you do know these rules and how it should work. That being said, hey, if anyone's listening, do what the IRS says. Don't, make sure you report everything. Guaranteed payments to partners. We will talk about this a lot more within partnerships. Guaranteed payments, these are essentially just salaries to partners, but partners in partnerships generally don't receive salaries. So you can think of these as salaries and wages to partners. Payments made to a partner in a partnership for services or capital without regard to the partnership's income. For example, if maybe the partner is really good at, it's an accounting firm, but maybe the partner is really good at painting and they paint the entire office and they get paid $20,000 for that, this amount will be included in their gross income. Nice little introduction to this. We'll see this a lot more as we get through the course, but just introducing that here. Taxable fringe benefits. Fringe benefits, these are non-cash benefits provided by an employer, such as a company car or gym membership. So any of these fringe benefits, get familiar with what examples of these could be. We'll see them as we go through. Maybe you get to use your employer's condo as you work for the company. The fair market value of these benefits is included in gross income unless explicitly excluded by tax law. Now, that's another good point. Generally speaking, you just throw out tax law. Everything's includable unless it specifically says otherwise. So if you want to just make a note there as well. For example, if an employer provides an employee with a gym membership worth $1,200 per year, this amount is included in the employee's gross income. For a portion of life insurance premiums, generally life insurance premiums paid by an employer on behalf of an employee are not included in the employee's gross income up to the first $50,000 of coverage per employee. So make sure you memorize that, get to know that. However, if the coverage exceeds this amount, the cost of the premiums on the excess coverage is included in the employee's gross income. So if your employer pays up to $50,000 for your life insurance, cool, you don't have to worry about including that. However, if it's more than that, it's as if the employer was giving you that cash to put into your premiums and you have to pay tax on that. So for example, if an employer pays a premium, $70,000 of life insurance for an employee, the cost of the premiums on the additional $20,000, so that's the $70,000 minus $50,000, is included in the employee's gross income. And lastly, the discovered treasures, again, that is included. We're pretty much going through everything you could see as multiple choice questions or sims. There's some that are more common than others, but I really want to make sure we cover absolutely anything you could see on the exam. And as we go through, I'll kind of point out the significance and how likely you are to see each item. Services. This is another classic example you could see. Well, when two people provide services for each other instead of exchanging cash, this is called bartering. Before we had currency, people bartered. And this example here, again, will I say the IRS will probably never find out about this totally? It could easily be the case, but again, we're focused on the textbook IRC rules, how this should work. In the context of taxation, the IRS considers bartering as a taxable transaction. Both parties involved in the bartering must report the fair value of the goods or services they receive as income on their tax returns. This is as difficult as it probably could be. Although, actually, you could see an example where they provide a service and give cash. We'll talk about an example like that later on. You'll see other examples throughout the multiple choice in Sims. Now, suppose Alice is a graphic designer and Bob's a web developer. They agree to barter their services. Now, Alice designs a logo for Bob's business, which would typically cost $500 for a normal client. In return, Bob sets up a website for Alice, which he usually charges $600 for. Now, in this case, both Alice and Bob must report the fair market value of the services they received through bartering as income. So Alice will need to report the $600 as income for the website development services that she received from Bob, and Bob will need to report the $500 as income for the logo design services he received from Alice. Make sure this example is in your mind. This is something that is true. It exists. Again, it's just something that you probably wouldn't report. But for bigger businesses, yeah, you probably will have to report this. There's no getting away with that. Although no cash was exchanged, the fair market value of the services provided in the barter transaction is considered taxable income and must be reported on each individual's tax return. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.